Hello, ladies and gentlemen. Welcome to the show. I'm glad to have you guys here. Today is Thursday, May 16th, 2019, and we are in the middle of a trade war between the United States and China. China's digging their heels in. The United States is digging their heels in. This trade war is going to go on for a long time, I think. But I think they are going to come to a settlement. I think what we're looking at is probably 6 to 8 months out. That's what I think. That's my opinion only, but I think they're going to come to a settlement probably 6 to 8 months from now. But the damage will have been done. And this is why they'll come to a settlement. They'll come to a settlement. Now, which side do I think is going to take the worst of the trade war? Which side do I think is going to win? Well, I'll tell you what I think. I don't think either side's going to win. And I think it's just about, this is why it's going to take a long time, is because both sides are just about equal. Now, there is one thing that this trade war is doing. It's going to help. Problems come when the dollar's too strong. This trade war is going to help to weaken the dollar. There's only one way out of this situation that we're in here in North America, which is we can either default on the debt or we can hyperinflate our way out of the debt. And to hyperinflate our way out of the debt is actually the less terrible option. They're both bad. You know, I mean, it's like saying to a guy, which do you want? You know, you want to fall off a cliff or do you want to get run over by a bus? You know, neither one's good. But the safest and easiest option is to hyperinflate our way out of the trade war. This trade war is going to increase the hyperinflation. It's going to lead us into the hyperinflation. Let's get started. Let's open up the charts right here and let's take a look at what's going on. This trade war, it says, now this article here says the longer the trade war, the sooner the recession. And they're right on the money. They're right on the money because as this trade war extends itself out over the next up and coming months, see, an awful lot of your businesses and stuff now that retail and everything, they've seen this coming and they've bought a lot of goods. They've increased their inventory initially to try to extend this into the trade war a while before you're going to see these higher prices. Because what they've done is they've stocked up, basically. So they're going to have to go through that inventory stock. So you're not going to really notice the effects of the trade war initially. It's going to take a few months before these prices on goods is going to raise exponentially, especially on Chinese goods. But it's going to take a little while because they've stocked up on inventory, anticipating this trade war. But this has also helped GDP. It's helped the economy and this stocking up on inventory. But anyway, everything's set. It's in motion. The trade war's in motion now. And we're going to have to watch it unfold and watch the results. And the results are going to be, in one word, I can tell you what the results of this trade war is going to be. Recession. In one word, recession. So now let's get on to the silver price this morning. What we're looking at is a very volatile silver price. We had a dip there where they tried to smash it down, and it bounced right back in their faces, more or less, you know. And this caused this little flash crash right here where it went down to around 1462, something like that. And now it's back up to 1472, but it's still 5 cents off on the day. Well, let's take a look at gold. Gold price, $12.92, and it had the same little flash crash. I think that's where they tried to smash it with the paper, silver. And this shows that they're continuing with this price manipulation on gold and silver. They're going to continue with it, but they're going to lose the game at a certain point. They're going to lose the game. And I think it's when this trade war, probably just after this trade war ends, they're probably going to lose the game with gold and silver, and they're going to lose control over it. But you watch these bankers. The bankers that are controlling the price of gold and silver, they've been pushing it to the downside for the longest time, for years now. and they've been making a lot of money pushing it to the downside. When it turns and the market flips the other way, then the same guys will push it to the upside. And they're already long on it. Take J.P. Morgan, for instance. He's got hundreds of millions of ounces he's stored away of physical silver. They already went long. They're long already. And they're planning on making money. And they're going to push it to the upside once it goes the other way, you know. And I mean, we're talking triple-digit silver at some point in the future. Not that far away. I'm not talking 10 years away either. We're talking triple-digit silver. Let's take a look now at Bitcoin. Now, yesterday over on my other channel called the Delta Report, I predicted this price slide in Bitcoin. It's happening right now, real time. But I also set a limit to it. It's probably not going to go below 6,500. And this is probably going to last for about a month or so. You know, this price decline. The next leg up is coming, is from what I think. Now, this is not financial advice. Remember, do not spend more on cryptocurrency than you can afford to lose. But coming up in about a month or two, I think it's going to go into the second leg of this newly emerging bull market, and we're probably going to see prices go up as high as 12,000, 14,000 in this next leg. So this is a little bit of a time when you can allocate some Bitcoin, some precious Bitcoin into your purse, you know, and you can hang on to it for the big ride that's coming. And I think there's a monster of a ride coming later on. Let's take a look now at cryptocurrency market capitalizations, and what we're looking at is 56.9% Bitcoin dominance. So that dominance has been dropping, you know. $244 billion market cap. Litecoin has been holding strong, $93.51 right now, and it's holding strong. It did break the $100 mark there yesterday. It was like 104, I think, was at its peak, you know. Anyway, we got Ethereum at $247, XRP at 40 cents, Bitcoin Cash at $392, EOS at $6.38, Litecoin at $93.51, Binance Coin at $25.61, Stellar at 13.2 cents, Cardano at 8.5 cents, Tron at 2.8 cents, and Monero at 85.57. Dash is $146.41. So there's your top coins. Let's take a look now at the Dow Jones Industrial Average for today, and let's refresh the page. We're looking at 122 points up on the day so far. So it's a positive day for the Dow today. It's probably going to stay up all day long. I mean, this Dow, you know, considering what's going on with this trade war, we're coming up to a crash. You know, the Dow's going to crash. But it's not going to crash right away. It's going to crash a couple months in when the actual recession actually gets going. You know, and after these inventories have been sold out, and there's a further $300 billion worth of Chinese goods that are going to be trade tariffed, and the trade war seems to be going nowhere a couple months from now, and the economies are starting to slide in both countries, China and the United States, then we're going to see a crash of the Dow, you know. And what's going to happen is they're going to step in. They're not going to let this Dow, I think, go below 20,000, and they're going to step in to prop it up. It's going to take massive measures of stimulus to prop this Dow back up again. And those massive measures of stimulus, along with the consumer price inflation caused by the trade wars coming together, is going to start to really have a compounding effect upon the U.S. dollar. You know? And that's when the velocity of money is going to start to pick up. Let's take a look now at oil. Oil price is rising today. It's rising 95 cents, which is quite a lot, 1.53%. If we get another couple days of rising oil prices like this, it will be reflected at the pumps, you know, and probably maybe a 5-cent increase, a 3-cent increase at the pumps, you know. Let's take a look now at U.S. Treasuries and see where they're going. Now, you know what U.S. Treasuries have been doing lately? They've been taking 2 steps forward and 1 step back. So 2 steps toward this yield curve inversion, and then they take a day where they take a step back. Now today they're in the step back away from the yield curve inversion. But we're not seeing the long end of the curve rise as much as the middle of the curve. The middle of the curve is rising almost 4 basis points. We got the U.S. 2-year at almost 4 basis points. And on the low end of the curve, we got falling rates. So, but they're only falling very marginally. Except for the 1 month. It's 1.5 basis points, which is reasonable. So, we're moving a little bit. Today is the day we're moving a little bit away from the yield curve inversion. Now, tomorrow will probably be the day where it takes 2 steps forward. So, it's taking 2 steps forward, 1 step back. 2 steps forward, 1 step back. So, the yield curve inversion is intensifying very slowly. But these days like today, when we take 1 step back, slows down that intensification of the yield curve inversion a little bit. Now, let's take a look at the U.S. dollar index today. 97.7 on the U.S. dollar index. We got a rising U.S. dollar index. This does not bode real good today for gold and silver with a rising U.S. dollar index. You know, but the reason why the U.S. dollar is so strong on the dollar index is because it's what it's being compared to. It's all about what it's being compared to. It's all about the euro makes up like 60% of the U.S. dollar index, and the euro, it's on extremely unstable ground, you know? So the dollar's mostly compared to the euro. 97.69 today on the U.S. dollar index. But there's no way this actually reflects the actual purchasing power of the dollar. It's just a comparison of basket of currencies that are all bad. You know, and the dollar's the best one in that basket, you know. Now, really, to have a good reflection of where the dollar's going, we should have 60% of the U.S. dollar index compared to Bitcoin. And if we did that, we'd see the dollars going to nothing. But they're not going to do that, you know. They're going to keep it pegged to the euro. They don't want to make the dollar look bad. They want to make it shine, you know. Anyway, listen. Thank you guys for listening to this market report. And give me a thumbs up and like and subscribe and, you know. And we'll catch you guys in the next show. Bye-bye, guys.